Alright, how's it going, guys? In this video, I'm going to show you my EMA strategy. These are the exact EMAs that I use in my trading as another added confluence. Now, for me, EMAs are just that. It's just another added confluence. It's not something that I use as a standalone. So I don't trade solely using EMAs, but it does add a great layer of confluence. And don't take my word for it. You can go back and back test with the EMAs that I'm showing you guys. Now, if you're not yet in our pro group, click the first link in the description below. Our members have been absolutely crushing it. Shout out to Trauma here. He's member of the week for sure. These guys are just absolutely crushing it, using the resources that we provide every single day, posting market analysis, signals, insights. We're literally feeding you guys the exact setups that we're looking at on a day-to-day basis. So you can actually learn from what we're teaching and not just blindly following signals. So if you're interested, click the first link in the description below. It's going to take you to our website, easyalgo.ai. Without further ado, let's jump into this video. All right, so to start, we're going to go into the settings here. Now, keep in mind, the EMAs are a free tool that you can use on TradingView. I like the EMAs inside of the Easy Algo indicator because we give you 3 EMA options here. So these are the 3 EMAs that I use a majority of the time. Now, on like a daily time frame, I'll sometimes use a 200 EMA, but it's very rare. I mainly use the 8, the 34, and the 50 EMA. So this green line here is going to be the 8 EMA. This purple line is going to be the 34, and then this yellow line here is going to be the 50 EMA. So mainly I use the 34 and the 50 EMA. Now the 8 is for shorter term trend flips. For example, if price is breaking the 8 EMA, I would say, okay, at this point, I would expect price to continue up into the 8 and the 34 EMA, right? If we get a strong close above. So that's the main reason I use the 8 EMA, but really I like to use the 34 and the 50 EMA, and this is across any time frame. Of course, this is going to be more respect on like a 4-hour and above time frame. I wouldn't really be using like 1-hour EMAs. I like to use a 4-hour, 12-hour, and daily is probably like your best bet when you're using these EMAs in particular, right? So you never want to use EMAs as a standalone, like I mentioned. You always want to have horizontal confluence, so either support or resistance if you're looking for a long or a short position. Now, as you can see here in Bitcoin's price action from the local top at around 72K, once we had failed the 50 EMA with a candle close below, we had retested the 34 and the 50 multiple times, right? 1, 2, 3, 4, almost to a T. So this is going to be your entry, right? If your bias is short. Now, it's very important that you have a higher time frame bias as well, right? Obviously, we're at a key resistance zone on a higher time frame, on a daily time frame. So our bias is going to be short after we fail this level. So it's very important that you have that daily bias in mind. But once you have that bias, you can look for entries once price retraces back into those EMAs, right? So you can see we tag the EMA, we fall below, break structure down, come up to retest, right? Again, break structure down, come up to retest, break structure down. This one, we didn't even get a retest of the EMAs, so we had missed that entry there. And something else you'll notice is that there is horizontal confluence on pretty much all of these entries, right? Or at least fib confluence. Like right here, I can see we're at this liquidity level, right? We grab that liquidity, fall short. Again, break structure, we have this bearish fair value gap. If we pull out our Fibonacci retracement tool, you'll see it comes right into our golden pocket. So this is what I mean when I talk about confluence, right? You don't want to enter just off of that EMA, but in this case, if you are in a downtrend, you can look for re-entries at that EMA if you have some sort of confluence, like a liquidity level, maybe a lower time frame resistance level, golden pocket fib, that sort of thing, right? So let's take a look at Bitcoin now. Now, this is a live example of a short position that I would be interested in trading. Now, you can also go to a lower time frame, which is what I recommend, instead of setting limits, because keep in mind, these lines do change with price action. So as price continues up to these EMAs are not going to be at the same level, right? They're going to move down slightly. So price is going to be slightly lower than what they are at right now as we're observing them live. So this is why I like to wait for price to react to them and then enter a market order based off of the reaction. So in this case, this would be a good scalp short position, right? Because we have a key fib confluence, right? A key golden pocket right here, overlapping this horizontal resistance zone, a bearish fair value gap, and we have those EMAs overlapping roughly this level. So this is an example in real time of a short position that I would trade using these EMAs. Now, if you look back in previous price action, like I said, you can kind of back test this yourself. We fail these EMAs, we reclaim them, push higher, again, another retest, push higher, fail, right? And this is where you're looking for short entries, right? Tags that 34 EMA, we fail once again, reclaims, retest that EMA, we get a bounce, fails, test as resistance again, right? So you guys can clearly see, how price respects these EMAs. It's also very important that you wait to see how price reacts at this level. Don't just set limits, like I said. So this is a bearish example. Let me show you guys another example of a current setup that I'm looking at. So this is actually a long position I'm currently looking at on LDO. And I'll explain why. We'll go step by step. So number one, right, I look for key horizontal levels with price history. So I immediately see here on the 8-hour time frame, and you can start on like a daily if you're doing a top-down sort of analysis, right? On a daily time frame, my bias is long, guys. Right, we had bounced from this bottom support zone. We're seeing higher lows, right? Higher high here with that market structure break, right? That bias flip to the upside right here, right? Bias flip to the upside, breaking structure. Now my bias is long, so I'm going to be looking for long positions. And that's where we can go down to a lower time frame, trying to pinpoint these key levels with price history. So on a 12-hour time frame, again, you can see the price history at this level, and there's no guesswork involved, guys. I'm simply using the easy algo support and resistance zones. I'm looking for zones that price has respected well in the past, right? So I can see we have a very well-respected 12-hour zone here at around, $1.85, and then I can also see we have this zone here where price is heading towards right now at around, 220-ish. So this is the main zone that I'm looking at here to be taking a long position from. You can see price had bounced as support, failed this level as resistance, again, right, rejecting off of those EMAs, right, rejecting off those EMAs, reclaimed, held it as support for a little bit, failed this level once again, came down, tested as resistance, and now we're looking to flip this level into support. So we have that key level confluence as number one, right? So that's the first thing. Next, we can see we've already reclaimed these 34 and 50 EMAs. And you can see that these EMAs are overlapping this support zone, and even down to like an 8-hour time frame, which is where I found this setup. You can clearly see, right, the EMAs are overlapping the zone. So this is what we want to see. We want to see multiple points of confluence. We want to see multiple EMAs overlapping that support zone. And even if we draw our fib from the most recent swing low, we can see that we have that fib confluence as well. We have the mid-range and the golden pocket near this level. So this is a golden long opportunity using the EMAs. Again, we're just using it as another added confluence. Now, when I'm charting setups, I normally don't have the EMAs on my chart. I do feel like it kind of clutters the chart at certain times, but this is a very easy way to find high probability setups using key horizontal zones and then looking for that confluence. Of course, you need a bias first, so make sure that you have a clear structure break, that on a higher time frame, the bias is clearly long or short. If you're in a ranging market, this doesn't work as well. In a ranging market, you want to trade swing failure patterns. But if you have a clear bias, like I do at this point for LDO, you can look for these key levels and look for that EMA overlapping. Again, it's the 34 and the 50. The 8 I like to have on for shorter term price action. Really, the 34 and 50 EMAs are kind of where the money's at. And then in this trade example, right, you probably set 1 or 2 limits here, or you can go down to a lower time frame and wait for a reaction, whatever your trading strategy is. And then, probably target these external liquidities. So target this level as your first take profit, and target the external liquidity all the way up here as your final take profit. Those are just a few live examples using the EMAs. This is kind of the only EMA strategy that I use. Very simple, not rocket science. It's not super complicated. You're just stacking confluences. That's it for this video. Leave a thumbs up if you have enjoyed. Click the first link in the description below to join the pro group, and I'll see you guys next video.